Okay, you're welcome, Mohammed. You're welcome, ACA Zakaria, ACA Mohammed. Can you hear me both? You're all welcome to the call. It's 7:15. Let's start.
Yes, sir.
Okay, fantastic, fantastic. All right, people are already joining. So let's start immediately. Dami, you're welcome. Mohammed, you're welcome. You guys, you're on mute. Let me confirm you can both hear me.
Thank you, sir. Thank you, sir.
All right, nice to hear you, Mohammed. Let's hear Dami. Dami, confirm you can hear me. Yeah, thank you. All right, nice to hear you. Okay, so we are starting. I believe you can see my screen. Okay, so by way of introduction, the mock exams, the second mock exams is about you, Adebomota. You qualified as a chartered accountant in Daudu and Daudu, a firm of chartered accountants. Now, there's a report from Michael Jelili, the finance director, who is your client. He sent to your boss, one of the partners in charge of audit services. So your firm provides consulting non-audit services to Ice Age Manufacturing. So you only provide consulting service to the company. All right, so let's go through the exhibits so that we can run quickly into the solution. So you got the first exhibit is an email from Tola Daudu, partner. So Tola Daudu is the partner, but you are the person Tola assigned the job to prepare the report. So the preparation of report has nothing to do with Tola Daudu. You are not reporting to Tola Daudu. So expressly, this is an external report. We should understand that expressly. It's an external report. And also the email came from the finance director of Ice Age Manufacturing to your partner. So you have the 2-year summarized financial statements of Ice Age Manufacturing as at 31st December 2024. Okay, so the email from Tola Daudu to you reads that we have a mail from the finance director, which is in Exhibit 2. This is Exhibit 1. Hello, sorry, my network was glitching. Can you hear me now? Please confirm you can hear me.
Yes.
Okay.
Yes, we can hear that.
Okay, my network glitched. Okay, that's fine. Let me continue. So I was saying that we received an email from Michael Jelili, our firm, Daudu and Co. We received an email from the finance director of Ice Age Manufacturing. So we had attachments, or we have attachments from the same company, which is the financial statements from the company for 2 years as at 31st December 2014. We also have, together with notes comprising of summarized accounting policies, significant ones, and other explanatory notes to the financial statement, which is Exhibit 4. Now we have the finance director of Ice Age in his email expressing concern about the deteriorating financial and liquidity position of Ice Age Manufacturing. He is of the view that the worsening general economic condition, rise in inflation and interest rates, changing consumer preferences have resulted in a drastic reduction in demand. So please take note of that, because when we look at the requirements, we need this information to be able to answer the requirements expressly. He also said the details of the production information are in Exhibit 5. So the company is a manufacturing company, and they are into production. production, sales, advertisement, marketing. So the finance director has also set out an extract of a report on ice age manufacturing, which was posted recently on a widely read and subscribed online blog. Exhibit 6, you'll see that. After a long phone call with finance director today, an agreement has been reached to prepare a report identifying any weakness and lapses in its value chain and suggesting ways to overcome them. The finance director is also of the view that some of the losses suffered are either avoidable or manageable and would like some advice on risk management strategies. So please take note of this conversation with the finance director. Take note of it. So exhibit 2, we are looking at the email to the partner talking about the history of ice age. Very important information. Take note. That's what we use to prepare the background of our information. The second item is ice age supplier relationship. Very important. That's what we use to answer the value chain question. The next one is ice age manufacturing limited production unit. Very important. We use it also to prepare our value chain analysis. Also, the next one is ice age manufacturing limited, the distribution and sales network. Very important component in the value chain analysis we are going to be looking at. The next one is ice age limited, which is people, talking about HR. Let me add some people to the call. Okay, Dami, you are raising your hand. Let me halt to hear you. Dami wants to say something.
Oh yes, sir. I was saying some people they are the door. They are knocking, so you should check them.
Sorry, I can't hear you clearly. What did you say?
I want to draw your attention to people that they are trying to access the training, the knock.
Okay, yes, thank you. I've added her. I've added Keriat. Charlady, you're welcome to the call. Can you confirm you can hear me, Charlady?
Yes, sir. Good evening, sir.
Yeah, good evening. Yeah, Jiki.
Alhamdulillah, sir.
All right, nice to have you. Okay, so let's continue. Okay, so the next one is people, ice age manufacturing people. We are talking of the workforce that is in ice age. This is very important for our value chain analysis. So the next thing talked about is ice age manufacturing limited, the financing, talking about their shares, the issue costs, contractual rate, and also the issue here is the finance director has decided to charge contractual rate of 6% of finance cost to income statement because he thinks it's a logical thing to do. But the question is it in line with IFRSs? So take note of these skeptical issues. You are applying your professional skepticism to what he's saying here.
Please repeat again. Repeat what you said. Sorry, sir.
Okay, so take note of what Ice Age finance director did here. He said, I made a decision to charge contractual rate of 6% as finance cost. Now, we all know that finance cost is charged on debt. Don't forget that. It is charged on debt. When you borrow a loan, it's a borrowing cost. You pay interest on that loan. So he's charging contractual rate of 6%. Is on what basis? So your professional skepticism should apply here. Why is he charging 6% as finance cost? We all know what finance cost is. He now said we are in dire need of additional finance but cannot afford to raise additional loan at this time. So this is 6%. Is it ethical? Is it on the basis of any IFRS? What's the basis for charging 6% as contractual rate? Do you get that, ACA Zakaria?
Yes, sir.
Yes, sir.
Very well, sir.
Okay, fantastic. So take note of that. All right. So the next exhibit is Exhibit 3. We have the 2 years financial statements. So you can see that their revenue increased in 2024. In 2023, it was 8.5 million. And in 2024, it increased to 10.9. The cost of sales also increased, I'm sure, as a result of more sales activities. The gross profit also increased, admin expense increased, distribution also increased. Finance costs remain the same. Operating profit also declined as a result of the admin and admin, distribution, and cost of sales. Tax expense reduced. Profit after tax, profit before tax also reduced. Take note of this. Profit from continuing operations dropped from 223,000 to 95,000. Profit at the end of the year, there were no discontinued operations. So our profit for the year or for the company is 95 and 223, the same thing for 2024 and 2025. Okay, so let's look at their asset statement or the position statement. You look at their assets, they had additional assets in 2024. It was 20 million worth of assets in 2023. In 2024, it moved to 24 million. Intangible assets remain the same. Investment property the same. Inventory increased. Take note of that. Receivables increased almost 5 times. Take note of that. Cash and short-term deposit declined drastically from 2.3 million to 40,000. What happened to the cash? And they have tied down money in inventory and they are not collecting receivables in 2024. So take note of these figures. We will discuss and speak about them. The ordinary shares remain the same. Their retained earnings increased. Let's look at their borrowing. They declined, they reduced their borrowings in 2024. Long-term borrowings. Deferred tax increased. Trade payables, very important, went up almost 5 times. So they are not collecting receivables on time, and they are not paying creditors also on time. Take note of this. These are issues we should discuss. We should point out as accountants or as the person that is asking them to, or as the person asked to evaluate the case. Let's take note of it. Okay, so all in all, we observe that the accounts balanced and we don't have issues with it. So we have the statement of equity, changes in equity, the same profit for the year. We also have the movements in share capital, which remain the same for the 2 years. Okay, so that was the end of the pre-seen. So we now have the unseen that was released afterwards. The unseen came about with the notes, additional notes to the financial statement, additional production information, and also industry information. So you are required to draft a report to the board of directors. So it's very important we understand this, to the board, even though it came from one of their senior management or finance director, our report is to be drafted to the board. Marks are allocated based on these parameters, which we have seen, and we will also take note of that. Okay, so required. Let's look at the requirement. Take note of what we've gone through in the exhibits and what is the requirement. The requirement is an analysis of the value chain of the business. Take note, value chain of the business and operational strengths and weakness. Sorry, somebody should mute. Somebody should mute. Somebody is not muted. Okay, let me mute Mohammed. Okay, I've muted Mohammed Yakubu. Okay, so analysis of the value chain of the business and operational strengths and weakness as shown in the information provided in the case. Now, the examiner is specific. He said you are expected, though not, let me not say he's specific. He gave you a plethora of options. You are expected to use Porter's value chain model. There are other models. He now said in bracket, or a similar appropriate model for your analysis. So he's recommending you use Porter value chain model. But if you have a similar appropriate model, which is on value chain analysis, you should go ahead. So take note of what the examiner asks you to do. He's very strict on you adhering to his instructions. Please take note of it. He now said your analysis should focus on key figures and issues and should provide a clear explanatory commentary together with your judgment and conclusions on the key items which you identified. And he said number 2, an analysis of the financial situation. So you can see the examiner has twisted the usual trajectory. Normally he comes in requirement 1 as financial statement analysis, but now he's twisting this information, saying you should do financial data analysis, because when models are released, models are spoken about in case study, it normally comes, or generally traditionally comes in requirement 2, but he's asking you to do it in requirement 1. So take note of that. So there's no hard and fast rule. The examiner could come in requirement 2, he could come in requirement 1. Anyone he does, please stick to his instruction. So number 2, he says you should analyze the financial situation of Ice Age Manufacturing Limited, and your analysis to take into consideration all the concerns raised by Michael Jelili in his email, which is Exhibit 2. You are expected to advise on the possible sources of obtaining financing, the possibility of obtaining finance open to the client, giving your views on the most appropriate with reasons for or against each source of finance. So take note of it. There are more than 1, 2, 3, 4 requirements here which he asks you to access, which is very, very important. Take note of it. So with the time we have today, we'll look at requirement 1. On Tuesday, we'll wrap up with requirement 2 in the evening, so that we can do justice and discuss appropriately, judiciously. Let's discuss requirement 1 elaborately on this evening time that we have. So back to requirement 1, he said the analysis of the value chain of the business and operational strengths and weakness as shown in the information provided in the case. He advised you to use Porter's value chain or a similar appropriate model for your analysis. He now said your analysis should only focus on the key figures and issues. So if you look at this statement he made on key figures and issues, I'm scrolling now to the financial statements. This is the additional notes to the accounts. If you can see my screen, you see that in Exhibit 6, he's telling you that the industry average or information, these are the ratios they gave you. So that you don't waste your time, ACAs, take note. You are to compute only these ratios. Once you have a question and they give you an industry mean ratio or information, don't go beyond them. You have just 1, 2, 3, 4, 5, 6, 7 only. Take note of it. You have only 7 ratios to attend to. And that is why he said in that requirement, because candidates will go and be calculating ratios that are not expected or instructed, thereby wasting their time. So take note, candidates. He said your analysis should focus on key figures, and they've provided you with the industry information. So those are the ratios alone or only you should calculate. Please don't forget that in every exam, so you don't waste your time shooting blank bullets. Calculating ratios that are not required in the exam is a waste of time and will not earn you any marks. Take note of it. So he said you should provide a clear explanation on the commentary together with your judgment and conclusions on the key issues which you identified. So having said that, let's look exclusively into our format. So I've shared the screen of our format. Now, if you look at the screen, you see that requirement 1 has to do with the first parameter. You want to take data and information from the exhibits to discuss, and let's pick 4 marks. So the data and information has to do with our analysis of financial statements. So if you look at the requirement 1 on the screen, we want to analyze the financial statements not from the appendix or from our ratio calculation. So we want to pick 4 marks from the financial statements only. Let's discuss the financial statements. So 4 key points from the financial statements of Ice Age Manufacturing. So let me go back to the solution. Okay, so I'm on requirement 1's page. I want to discuss it. So an analysis of the value chain of the business and operating strengths and weakness using Porter value chain model. So I don't have an appropriate model or another model in mind, but I'm using value chain because the examiner suggested that. I could decide, or if a student uses another model, you will not be penalized. So let's talk about the financial statements. So the first point, as you can see how I've structured my headers and subheaders. The first one is analysis of financial statements. Then the second subheader is A. So I want to pick 1 mark by saying A. I want to talk about the income statement. So understand that abbreviations are allowed in the case study exams, especially as it has to do with the key terms in the exhibit. So like I said, IAML's revenue, instead of saying Ice Age Manufacturing Limited, abbreviation like IAML is allowed. But abbreviations like N instead of AND is not allowed. Take note of that. That is informal way of communicating. But IAML, the examiner knows you're talking about Ice Age Manufacturing Limited. So I want to talk about the income statement. I said IAML's revenue increased from 8.5 to 10.9 in 2019, reflecting a growth rate of 27%. Despite this increase, the company experienced rise in cost of sales from 5.8 to 7.6, which resulted in gross profit of 3.2, up from 2.7 in 2023. This data, I call them free marks because you don't have to calculate anything to get 4 marks on this parameter. Admin expense and distribution also grew, reducing operating profit from 799 to 615 in 2024. With finance costs remaining constant at 480, profit before tax declined by 57.7% from 319 to 135. After accounting for tax expense, profit attributable to shareholders dropped from 223,000 in 2023 to 95,000 in 2024, representing 57.4% decrease. We've talked about the income statement. Now you now said briefly on the financial, on the statement of financial position. The asset for IAML, we spoke about it. You can see, you just briefly talk about that. Then you go to equity. You talk about equity, how it increased from this amount to this amount, reflecting profitability. So they shared their profit. Retained earnings also increased. They retained some profit and they also shared some dividends. Liabilities also rose from 14.2 to 15.2, largely due to increase in deferred tax liability. We are talking about liability now. You now said the borrowing slightly decreased, indicating some debt repayment. Current liabilities surged, that is increased, from 1.9 to 6.7, driven mainly by increase in payables. So they are not paying creditors or suppliers on time, reflecting potential challenges in meeting short-term obligations or extending supplier credit. Take note of that. So we've picked 1 mark based on this A we just discussed. So be mark conscious. B, we looked at the steady growth in revenue and their parameter. Despite this, cost of sales increased. All other costs, operating expenses, sales commission increased. Additionally, IAML issued corporate loan notes with 6% interest rate, affecting cost of 8% due to discount. Now you are talking about the cost and the challenges of the company. You pick 1 mark here for B. Then for C, we want to pick the 3rd mark. We said IAML is currently navigating challenges due to production staff. If you look at the exhibit, you'll see that there are staff issues in exhibit 2. And the issue of the loan notes to raise funds through the company the company should remain cautious about taking additional debt due to economic strain. So talking about these challenges with staff, the inventory system, you've picked 1 mark. Then the next mark is about IAML operating as a non-listed company, which allows it to avoid regulatory demands and public scrutiny. So being non-listed reduces external market pressures, but it makes it more challenging to attract significant investment or build market credibility. So from the information in the exhibit, you'll be able to discuss and pick 1 point. So you've picked 4. You've spoken about 4, which is superior achievement. You can move on. So I added 1 for you so that you have plethora of options to discuss. IAML is also navigating competitive industry issues with cost management and operational efficiency for survival. So you can see the market positioning and sustained growth hampered by internal and external risks. It's very important to state that. So out of these 5, you could pick 4, then you move on. So you've gotten 4 marks for analysis of just the financial information on the exhibits. So number 2, we have 7 minutes more, so we can go for the sharp prayers. So let's look at number 2, which from our requirement 1 format. We're talking about professional tools. So in these professional tools, you have to take note that whether it comes as exhibit 1 or exhibit 2, you have to talk about the model you use, or where it is IFRSs, you talk about it. So the tools could be models, they could be ratios, and they could be strategic or performance management tools. So in the second parameter, that is what you should talk about. Take note of that. So in this case, where requirement 1 came as a model, we will not calculate ratios. We calculate model, the model analysis. Take note of it, the model analysis. Okay, so before we start discussing the model, let me go to the appendix and show you what the model looks like before we discuss it. Let me show you what the model looks like. I believe a lot of us know about Porter's chain model. So let me go to the exhibit and let me show us the model. Okay, so Porter's generic value chain model talks about 2 activities. Number 1 is support activities, and number 2 is primary. So primary activities in the sense that these are the activities driving the company. Those are the people in the front end. Primary activities, they are the guys at the front end. So they are the ones bringing business to the company. While we have those at the back end who are support activities, they are the ones supporting the guys at the front end. So it's like football. You have the attackers, you have the midfielders, and you have the defenders, then the goalkeeper. So in the value chain analysis of Porter, we're talking about those are the primary activities, which involves inbound logistics, those that get raw materials, work in progress, and finished goods. So there are those handling inventory, warehousing, which is called inbound logistics. Then for operations, which is the next parameter based on Porter's value chain analysis, he talked about machines, assemble, testing of products. So it's a manufacturing firm that has to do with a lot of machines. So the operations is the next parameter or metrics on the value chain model. So after looking at the inbound and the operations, we now look back outbound. That's how these products are brought to the final consumers or to the distribution chain. So in the distribution chain, you know, we have the manufacturers, we have the wholesalers, we have the retailers, then we have the final consumers. That's the distribution chain. So that's where the outbound logistics is domiciled, warehousing and distribution of the finished products. Then the final one is advertising and sales, those that advertise the product and bring it to awareness, advertising, promoting, pricing channel, and customer relations management. So after marketing have done their sales, we also have after sales services, which is the fifth one: installation, repairs, feedbacks. So that has to do with the last parameter. So these 5 value chain, or these 5 areas, are the primary activities based on Porter's model. So if you look at manufacturing firms, it's replicated in most times these 5 parameters. You see that is how they operate exclusively. Then the next one we'll talk about is supporting activities. So these are the primary activities, then those that support from the back end. Remember, primary activities as those at the front end, supporting activities as those at the back end. So the firm's infrastructure, the general management, the board of directors, accountants, the finance unit or department, strategic planning, those in other support units like HR, those that recruit, train, and develop. We have IT, research and development, product and process improvement. Then we have procurement, purchase of raw materials and machines and supply. So these 4 support activities based on the value chain analysis by Porter are those that are at the back end. It's very important. So having looked at this value chain analysis, we should be able to speak about it in relation or in context to Ice Age manufacturing. In relation to Ice Age manufacturing. Okay, so let me go back to our discourse on requirement 2. So having looked at this, let's look briefly. We have 2 more minutes. Let's look briefly at the model. So picking the first point, you see that Michael Porter's model outlines within the business value added to products and services leading to competitive advantage. So you just briefly explain the primary activities as we spoke in the exhibits, 5 of them. You also explain the support activities, 4 of them. And we said it enhances efficiency and effectiveness by optimizing these interconnected activities. A company can create more value than its competitors, driving profitability and market success. So you can see from this explanation of Porter's model, you picked 1 mark before you now apply it to Ice Age. So we use the value chain, both activities, support and primary, to explain what the model is about very, very summarily. So we did that in 1, 2, 3, 4, 5, 6, 7 lines. So you could do 4 lines, 3 lines, just discuss to get that 1 mark in the discussion, which is very important. All right, ladies and gentlemen, it's time for Isha prayers. This is 7:50. So we convert back at exactly 8:15 so that we can round up requirement 1. Okay, let me answer Dami's question. All right, Dami, go ahead. You're trying to say something. Dami, on mute, please, and speak.
Yes. Yes, sir. The first one we said just now before the value chain, so financial statement analysis, the income statement and the financial position. Right?
Sorry, I'm struggling to hear you. Can you move closer to the mic? I can't really catch what you're saying.
Okay.
Move closer to your mic or put the phone close to your mic.
Okay.
Yes.
Stop using your earpiece. Hello?
Can
you hear
I
me?
can hear you loud and clear. Loud and clear. I can hear you.
Yeah, we
Please
can
go
now.
ahead.
Okay, sir. I said
go ahead.
the first one we run through, which is the financial statement analysis, that's income statement and financial position that you explain the trend in the revenue and the cost of sales. We are dealing with requirement 1, which is talking about the value chain. Are we supposed to bring that in, or the requirement 2 before we start that financial statement analysis of income and the financial position?
Okay, fantastic question. Thank you very much for that question. So, you see, the first parameter is you're talking about the analysis of financial information. Now, on that parameter, you don't have to talk about portal value chain. So you run through the financials on that parameter. You can talk about that. Requirement 2 is where you will discuss in detail the ratios you calculated. So requirement 2 is going to carry the ratio. But you see, for that financial information, analysis of financial information, or the information provided without calculating ratios, you talk about it in requirement 1. Then you see from 2, which is the portal value chain, you can now talk about what the examiner asks you to talk about in the requirements. It's a fantastic question. I actually expected it, because when I was solving it and I saw the requirements, I said, oh, a smart student should ask that question. Thank you very much for that question. I hope it's clear. Yeah,
yes,
you're welcome. Okay, ACA Mohammed, we need to go and pray, but let me take Mohammed's question, then we'll halt and go and pray. Mohammed, please go ahead.
Yeah, over here in Sokoto, it's not yet time to pray, actually. Thank you, sir. Sir, please, concerning the next meeting, which is on Tuesday, please, I'm suggesting, please, if we can have it on Wednesday, because actually I will be leaving Sokoto to Kano on Tuesday, God grace. So that I will not miss it, and it's going to be a long journey for me. 2, actually, it's concerning the requirement. Actually, I was just laughing because actually I know I made a mistake, because I was not taking the financial ratio analysis as 2. Rather, I actually embedded it in question 1, and so it's actually funny, and I don't know, but I've gotten to.
I understand. So you are already reporting yourself even before your script.
Of course, yes.
All right.
Class captain, don't laugh, class captain.
Already. Class rep, you see, ACA is reporting himself. Well, I appreciate your attempt. Thank you, ACA, for attempting.
No, actually, I feel I did well. Actually, I did well, but actually, the only mistake was for me to embed 2 requirements in a single requirement.
Yeah.
But nevertheless, we're progressing. Thank you very much, sir.
I hope you scored the 50%. Yeah, I'll look at your script. I hope you score.
No, I just want 60% is even okay, sir.
All right. Okay, so
thank you very much, sir.
Back by 8:50. Let's pray and come back by 8:50.
Thank you very much, sir.
Welcome.